Welcome to the Daily Stock Review. Today we're going over Canadian National Railway. The goal of this channel is to uncover the world's best stocks that have 100x potential. I'm an individual investor, 2,500 hours into the journey over the last 7 years, and I'm sharing the lessons along the way. Today we're going to jump straight into the stock analysis. My investing process is 5 steps. First step, 2 steps that we're going to look at though is where I found and come across this stock, and the 5-minute check that we're going to do today to see if it's worth looking into further. Learned from these guys, they did pretty well for themselves over the last many decades, and by following in their footsteps and following their breadcrumbs, I hope to achieve some of that success. All right, let's jump in. So first of all, I'm just going to be looking for their annual report. The latest one's 2025, so I've already gone and opened that up. Took a little while to open because it's quite a large document. I think it's about 20 meg of just photos, etc. And really we're going to have a look down into the financial statements. Now, how to come across this business? Some of the businesses that Warren Buffett has looked into in the past are businesses that have large moats. And one of the strongest moats that we can have a look at is businesses that are effectively like a toll. And so they have the infrastructure already built, and people that want to utilize their infrastructure pretty much have to pay like a toll on that. And so lots of railway companies and other service providers, like other utilities, like people that own the poles and wires for electricity to be put out, and water supplies and things like that, can be great businesses to look into. Knowing that Berkshire Hathaway purchased, BCNF back probably about 15 years ago, and it's been a exceptional purchase for those guys. So I'm just going to quickly go and have a look for these financial statements. Here we go. Now, there's 3 things that I'm kind of looking for and just want to be answered. One is the mastery. So has the business mastered its customer? We want to see it pretty consistent, or at least growing in revenues and having some form of healthy margins on it. We want to see that there's also a moat around the business, so that it's showing that it has some pricing power. So in the profits of the business, we should be able to see that in the margins. Next is we want to be able to tell if management's rational. So by having a look at that, we should be able to have a good understanding if this business is worth looking into further. And that would all be concluded within spending 5 minutes on it, not wasting time reading through annual reports and falling asleep after an hour, if you get that far. All right, so here we've got revenues from 23 to 24 to 25. You can see that it's steadily increasing. It's not astronomical, definitely not. Is this in millions? Yep. So 16.8 billion, 17 billion, and 17.3. So over time, their revenues are slowly increasing. Total operating expenses come out. So what are we looking at? We're looking at about 7 billion out of 10. So what have we got there? It's about 40% margins for the business, or gross margin, which is pretty reasonable. We've got a net income at the bottom of the business of, a little over 4.5, which comes out at, what do we got? Even if that was 20, that'd be a little over 25% net margin. So that is a pretty good business. So it does have a moat around it. So having that infrastructure and those assets in place does give it some significant pricing power. Other business that are competing as a commodity, they would have tighter net incomes. And so that's why we want to find businesses with strong competitive advantage around it. Right, let's go and have a look at the assets. So for a business like this, we would expect it to have significant amount of assets. So cash equivalents is fairly low. Properties, well, not that that's an issue. Properties is significant, so it's purchasing more properties, or the value of those properties is being reevaluated each year. So it'll be interesting to go and have a look at that note 11. So around 50 billion worth of that. Operating lease right of use assets is small, and then pension asset, note 17. So a lot of this business is obviously owning the land around it. We'll be able to check that out on note 11. What about our liabilities for the business? So is there any other concerns down here? What have we got? Deferred income tax, liabilities, long-term debt. Total liabilities comes to 36 billion compared to our total assets. That's pretty small. We've also got a thing at total current assets is not much at all either. So accounts receivable is very light as well. Accounts payable. All right. So it looks like they do have some significant long-term debt, and we want to, if we're looking in the business further, we'd want to go and check out what note 15 was and note 11, properties. But the net income that's coming out at the end of the day is very consistent, and it's a very high margin. So interesting that they've got that much debt in the business. All right, let's go and have a look at the cash flow statement. So this will help us understand what management is prioritizing and how if they're being rational with how they're spending the business's money. So we've got our net income that came out from our income statement. It comes out at the top line of the cash flow statement. We have these non-cash charges get adjusted. So these are things that didn't actually cost the company anything this year, but it's an accounting requirement to make the income account for some of these items in advance. So accounts receivable, blah, blah, blah. We get net cash provided by operating activities. Look at this. So investing activities, property additions. So what's this business doing? So it's making $7 billion in cash a year, and it's spending pretty much half of that on property additions. Business acquisitions, what else? Now, obviously, they do need to maintain the tracks and things like that as well, unless they don't as part of their business and they share the requirement. But property additions, increasing their future capacity to carry freight, etc., is something that the business is trying to grow. So it's trying to grow that moat of the business, which is good, a really good sign to see. Now, what's it doing about this debt? So issuances of debt, repayment of debt. So it's still got that long-term debt sitting there, changing commercial paper, repurchase of common shares, note 18. Okay, so this business is also, with that leftover money, the majority of it's going back into repurchasing common shares and then paying dividends to its shareholders. So distributing that cash back. So it's an interesting, I guess, there's some investors that really like dividends, and then there's some investors, like value-wise, that really like to see common shares being repurchased because it grows the value of each other share that's still left within the business as those other shares come off the table. But interesting that they've still got that debt. So I might end up just having a look at, what was it? Item 20. We've got debt. So they've got some, I guess, long-term debt, and there's a lot of them. So it's distributed across the years. So trying to either decrease their risk there. Look, we've even got a 50-year note that the business has put out at 4%. So these are effectively corporate bonds. And it's interesting that they go out that far. So there are some businesses and investors that like holding the bonds from corporate entities, especially very consistent asset-based businesses like these. Let's have a look. We want to see 20. I think it was 20. We've gone past it now. Share capital. Wow. Accumulated another comprehensive loss. No, I was crazy. What would be great is in the financial statements, them being auto-linked to where that note is from. That would be great time saver. So issuances of debt. No. I just want this one. Where is it? Long-term debt. Note 15. I was crazy. We're already having a look at it. Derp. All right. So yeah, that is just the breakdown of debt and when it's due then. All right. Thought I was going to have a little bit more of a chat about it. All right. Well, that is pretty good then, because this business can just pay off a little bit of those debts each year and then just maintain that over time. Because these notes do go out and they are distributed through time, it's not like the maturity date of these is all coming due in 1 year, which is going to then force this business to throw it under the bus and the potential for it to go bankrupt. So that's a good sign to see. It's pretty much that they're buying and selling their own debt each year just to service what they need to, but ultimately it's more like it's just trying to keep another selection of investors happy. So it's keeping an ecosystem of people that are interested in corporate bonds around it, people that are interested in dividends, and people that are interested in holding the value of the company long term as well. All right, is this business worth keeping an eye on? Yes, because this business is super consistent. So if we have a look at the share price, we can see over the last 5 years that for some reason we're looking at the 3 years worth of data, which goes over this, and including 2025, and the value has dipped by over 50%, from up around almost 130 back down to 90. And so has the value of the business actually decreased that much? If we were just reading the annual report that came out here, I'd say no. And it's been reflected in the last, 6 months when the stocks bounced back. So there could have been some bad news and things like that. But at the end of the day, a business like this literally just continues to chug along. It is the little engine that could. So these ones are great businesses to keep an eye on, especially when there's a meltdown, because you can get buying a really good business and just it continue to grow, especially if the management team has that strategy of building out its future, asset base, which helps it bring in some more cash in the future. So If there's any other stocks and things like that that you guys are interested in, feel free to drop some comments below. If you guys have any thoughts on it, if you got into the Canadian National Railway at a great time, let me know. And if you'd like any free resources, calculators, etc., to help with your investing and stuff, check out the link in the description. It'll help you out as well. All right. Otherwise, check out this next video because YouTube reckons you'll like it. Cheers.